Hello and welcome to this month's episode of Africa's Boardroom. I'm Stephen Gunyon. Now, in the wake of the global financial crisis, the banking industry is set to reshape itself substantially. From consolidation to enhanced operating models, the financial industry as a whole is evolving. Joining me in studio to share their insights into how financial institutions are and should be changing in this post-recessionary environment are Riaz Osman. He's Senior Executive at Accenture South Africa. Thabo Ndlela, he's the CIO at Absa Business Bank. And Luis Matias Rodriguez, Senior Manager at Accenture Spain. Gents, thanks very much for coming in. I'll start with you, Riaz. The global banking industry, are we seeing it being reshaped post the recession?
The global banking industry is going through fundamental change, and that's been brought about after the financial crisis. And we saw the impacts mostly in North America and Europe. What we're finding, though, is that the repercussions are worldwide. So it affects us here in the emerging market economies, as well as elsewhere in the world.
How are you seeing it at Absa, Thabo, and how are you actually setting yourself up for changes that are evolving here?
What we're saying is that there's less focus on pushing products now to customers. There's a lot more focus on the customers themselves, and issues such as multi-channel distribution is what we're focusing on, particularly things like mobile banking, and also things like social networking has become now a part of what we actually will be doing as banking.
Liz, how do you see successful banks operating into the future?
I think there's going to be drastically change from what there is right now. I agree completely with Thabo about looking outward to the client and really thinking about what they need. And then on the outside, on the inside, they really have to transform the way to operate, and they have to become more industrialized.
Do you think banks are ready for these changes, Riaz?
I think they've got no choice. The banking industry is evolving at a very rapid pace. We've got new entrants coming in, we've got mergers and acquisitions happening, and we've got a customer base that is rapidly changing with different needs. And so banks need to be flexible enough to accommodate the changing business environment.
Are they flexible though, Thabo? Because you think of banks as quite staid models. Do they have the systems to change rapidly to meet this evolving landscape?
They will be forced to by the market. As we know, the regulation is actually changing. There's high pressure to make sure that they comply. There's also customers are getting a lot more educated. They have much better choices. The telcos and the retail industries are expanding into the banking arena. They find themselves actually with a much tighter competition. It does mean that they'll have to reshape themselves internally and gear themselves actually to face this competition.
Well, Alicia, Thabo mentioned customers becoming a lot more savvy. They're also a lot more dissatisfied, and I'm thinking globally here more so than in South Africa, more dissatisfied with what banks or how banks have come through this crisis. How do you win back that customer trust?
I think banks have to fulfill the promise that they make to clients. And I think in order to do that, they also have to transform themselves. So if you tell a client, and client expects of you to deliver something to it, they're not, in those times that are really critical to them, you cannot fail the client. The problem is that to do that and to be able to actually perform according to those promises you've made to clients, you really have to transform yourself to do it consistently.
Of course, we still see banks in South Africa under pressure. Of course, we had news recently that Standard Bank was still laying off workers, so still coming through a very tight spot. Do you think by evolving, they may face future crises more capably, Riaz?
It depends how they organize themselves now. So what we're seeing in the market is a lot of cost reduction. The question is whether that cost reduction is strategic or not. If that cost reduction is tactical and layoffs merely as a short-term measure to reduce costs, then I don't think they're going to be ready when the market turns. If their cost reduction is of a strategic nature and they start creating lean environments, efficient processes, that means they'll be able to gear up a lot quicker when the economy improves. So I think the key question for banks is how are they addressing cost reduction? Is it strategic in nature or is it tactical? And it needs to be strategic.
And of course, we do know, Thabo, that banking goes through cycles like any industry, and you will get to the trough of the cycle, which is where we've probably just come from. Do banks remember how bad it was the previous time? Do they remember the lessons learned from those things?
The cycle is becoming a lot more shorter than it used to be. And if you think about the last recession, actually, it was quite a while ago. So you tend to find that they tend not to remember because the cycle used to be long. Nowadays, the cycle is going to be a lot more shorter because the environment is changing a lot more faster. regulation is changing a lot more faster, and there's a lot more products out there, and we will see that the market actually changes will be a lot more often. And as they go through these periods, there is sufficient intellectual property for them to be able to retain some of the memories of what they've gone through, be able to gear themselves up for the next phase actually coming up.
I guess what I'm also trying to ask there, Louise, is those strategic cost reductions that you put in place now, do you keep them in place even when the times become a lot better for you, or do you just let costs start to rise again?
You definitely have to keep them in place. And the good examples that you have around cost reduction across the globe in banks that have actually made it happen is that you have to actually maintain it, and it has to be sustainable. So it goes back to a lot what Riaz was saying about being from a strategic point of view and not a tactical. If it's just tactical, it will not work and it will not be sustainable. But you definitely have to maintain sustainable cost management throughout the whole time. So if you take a look at examples like Santander, they've had figures and functions around cost reduction from when times were good. And so it's not like they put it in place when things started going bad. They had it when things were going good.
So you don't let those costs run out of control when things do turn better?
You definitely keep them.
How about transparency? I'll ask this to you as well, particularly on a global scale, because there has been talk of banking being quite opaque, particularly investment banking. We have seen moves to separate investment from retail banking and to create more transparency. Is this something you're going to see in a global scale with banks like Santander?
I think you have to have, and governments and regulators have to have put the compliance measure in place. I don't think you can force banks to go and divest and start creating barriers all over the place, because you're going to go against efficiency. So I think you have to have put in place enough compliance and governance, and regulators, it's their task to do it, and banks have to comply to it. But I don't think banks will have to go and say, well, let's divest completely and let's completely divide between what we do in commercial banking and investment banking, for example.
So perhaps bringing that back to South Africa, because of course we have heard what's happening with banks globally. Do you think South African banks will necessarily follow suit with regulations that are introduced globally?
I think most of the banks, if you think of the emergence of banks like Capitec, they're a lot more focused on retail. So we're going to start seeing a lot more focus. Those that are investment bank, they will be very niche and they'll concentrate on their areas of strength, as opposed to trying to be large banks that accommodates everything. And regulation definitely will play a critical role, just to make sure we keep the banks honest in terms of delivering the value proposition that customers are expecting. And if you look at around retail, and today with the entrance of telcos in that space, it does mean there has to be regulation in that area, and we'll see a lot more focus from banks.
Well, Riaz, Capitec was mentioned, of course. That's quite a reasonably new entrance in the retail sector, so stirring up some competition. How do you see telcos and retailers perhaps developing in the South African environment to bring more competition to banking?
I think given the amount of cash that is flowing into those industries and companies, there have been examples of them delving into banking. The question remains how successful they will be. I think banks like Capitec have got into a niche market. They're technology driven, they offer low cost banking, and they've started tapping into the unbanked market, which a lot of banks have been trying to do for a long time. And I think that is the challenge. The four banks in South Africa haven't seen a lot of competition over the last few decades. And with the new entrants like Capitec into the market, and they're making significant inroads in the market, I think we're going to see some significant competition, which is good for our banking industry.
If I may add one thing around competition and new entrants, I think the fact that the payments landscape is going to evolve, and you have mobile payments, and the role that mobile telcos can play, and also retailers can play there, is going to have a major influence on banking. And banks are going to have to fight for clients that they now feel they're secure, and they may move into retailers or telcos if they do a better job with it, more efficient and more closer to their needs.
Well, of course, we've seen the success with M-Pesa in Kenya. Do you think this is something for emerging markets, though, or is this also a model that we could see evolving in the developed markets, even though they don't have as big unbanked populations as we have here?
It is clearly a global thing, and there are examples in developed markets around telcos trying to get into bank space, and payments is really the barrier, the key to entry.
Do you think we've seen local banks, Thabo, moving fast enough on this issue, linking up with mobile companies and with retailers to offer services to unbanked and particularly to rural communities where we don't have infrastructure?
I don't think they've been fast enough. If you look at M-Pesa, most people were cynical about whether it's going to be successful or not. Now that the telcos are bringing it through, banks will be forced now to actually adopt it. However, they will still have a difficulty around the customer ownership, in a sense that if you have a customer that transfers money via a telco company, at some point it will hit the bank. So if you start looking at who exactly own the customers going to the future, and how do we create a wider value proposition for them, it's going to be quite difficult for banks. And I think the sooner they got on top of these mobile banking, the better.
Do you think that banks are going to help drive this mobile banking in South Africa?
I think definitely so. The power of the mobile phone in Africa and emerging markets should not be underestimated. If we look at Africa alone, we're talking about mobile phone users to the tune of close to 400 million. And a large proportion of those are unbanked individuals. And the mobile phone offers flexibility in terms of money transfers, payments, and to me it offers simplified banking. The key is if banks can offer simplified banking, cheaper banking to the unbanked market, that's where the secret sauce lies.
Because it really is about price at the end of the day, isn't it, Thabo, and availability and accessibility.
Price would definitely be a differentiator going forward. As we know now that we have a wider option to choose from. The other aspect about it is that banks, as Riaz is actually saying, is that they need to be a lot more simpler to deal with. It does mean that they have to optimize their business processes and get to respond to customers a lot more faster than they currently are.
How about M&A activity? And of course, we have seen quite some moves afoot, particularly in the United States, some in Europe. Do you think that's also going to be a growing thing that we're going to see going forward?
It will, and it's a matter of the market forces and will drive it. I mean, you're going to have to be competitive, and one of the ways to be competitive is through M&A. And we've seen examples. I mean, if you take a look at what happened since the crisis, and you take a look at examples like Santander, who's probably been in the largest shopping spree in terms of M&A, they actually have a model that allows them to integrate the new acquisitions very fast. I think that's what's going to force others to do the same thing and acquire size and efficiency.